good evening to everyone. I hope you all are fine and doing well. So, today we are here for BFM MCQs Cracker Batch. Basically, in this, we are going to learn about what are the things that are important, how we are going to learn the things in this batch, a complete process. Okay, so as you know that BFM is that subject that includes numericals, case studies, questions, concepts, all the things are there in one place. So let me introduce first myself. My name is Aishwarya Sharma. You can see about my educational background, my subject matter expert, my teaching experience almost 6 year plus, and yes, number of students I mentored at 50,000 plus. So, and then followed by the introduction, let's see the intro of BFM also. First chapter is international, first module is international banking, in which we are going to learn a lots of concepts, and from the exam point of view this module is very important because this is complete package of numericals, case studies, lots of concepts are there in this international banking. You have to think about forex, that is the pet name of foreign business, trade. So forex, foreign, and trade, these three things. And the important topics are exchange rate system, quotation methods, direct, indirect, TT, telegraphic transfer, bill rates, foreign exchange transaction, whether it is spot, forward, swap, merchant trade, nose to accounts, export import finance, ECGC, FEMA, FEDI rules, exchange control, ECBs, lots of concepts are there. Yes, there are numericals also on merchant rate, exchange arithmetic, so we have to focus on this. That is about the intro of international banking. Then we have risk management. Complete module tells how to identify, how to measure, how to control, and how to reduce. There are lots of types of risk that are very important for us. In this, we will learn about credit risk, market risk, liquidity risk, that is also called ICU of the risk, and our operational risk, that is the risk which is very dangerous, right? So this is about the risk management. Then we have third module, which is about treasury management. In treasury management, you will learn about how to manage the bank's money, how to manage investments, what is the role and function of treasury, what is money market, forex market, all the questions on this, all the important questions, all the important concepts, questions, case studies, numericals, you are going to learn in this. The numericals which are very important are from bond yield, duration, and portfolio. And last but not least, our module D, balance sheet management, where we have to learn how to earn a profit and how to be stable in the market. In this, we will learn about what what are the components of assets, what are the sources of funds, what is NPA, what is RAROC, what is integrated balance sheet management. These are concept based numericals are there in this, and ratios are there which are very important for our examination. So that is module D, balance sheet management. Got it? So this is a quick overview of our all the modules. Now here I will tell you today the thing what you will get in this particular batch. First, let's meet our champions of CAIIB June July 2024. These are the champions who cleared their CAIIB exams. 2000 plus selections are there in Oliveboard, and uh, these people done hard work and follow all the things. Now I want next photo of yours in this chart, so in the next cycle I will flaunt that photo with full happiness. So these are the champions. Now in this batch what you will get: 80 plus live sessions, and bonus is there, summary videos, live MCQ practice daily. We have to do practice of MCQs. There are mock tests available with AI analysis, right? Medium will be English, so you have to enroll now for this batch. And what is the strategy for module A? We are going to complete this module A in 7 days, and there are total 11 chapters, right? Module B we will complete in 7 days. Then 5 or 6 days we will cover our treasury management, and in next 5 days balance sheet management. So this is the strategy. We will cover chapter by chapter, right? And learn all the things, all the related concepts of this module A, B, C, D. Now I am going to ask you one question, so give the answer. Which topic scares you most in the BFM? Which topic scares you most in the BFM? Is it forex, risk management, treasury, or numericals? So imagine you are a manager at the SBI bank, and a diamond exporter walks in needed to hedge against US dollar fluctuation. Then what will you do? What will you do in that situation? You are at the manager post and giving good vibes there, but there is the diamond exporter walks in needing to hedge against US dollar fluctuation. In that situation, what will you do? Think and tell me the answer. What type of concept used here? Think and just learn about all the types of concepts whatever you learn in BFM, forward rates and any other uh, topic which is appropriate here. So let me tell you about here. Basically imagination is okay, but what is the answer here? How can we deal with this type of situation? In this type of situation, basically to deal with this type of situation, our BFM knowledge comes here. So what you can do, first you will see the things. Your manager at and diamond exporter is there. Suppose Mr. Mehta is come there and he just shipped diamonds of worth US dollar 1 million. Payment will come after 3 months, but Mr. Mehta is very worried. Mr. Mehta is worried about what? is worried that what if the dollar rate falls? Mr. Mehta will lose lakhs. So, what will you suggest to him? Should he wait, pray, or hedge? What will he do? So, this is where forex risk management comes into play. As a banker, your job is to protect your client from currency volatility, right? Volatility is the movement, right? Your job is to save your client. Suppose if the current spot rate is suppose here, just a second, rupees 3.80 per US dollar, right? Per US dollar, this is the current spot rate. Or suppose after 3 months, I think 3 rupees is very low, so we can take here 83. Just a second. Is my screen is visible? Let me check. Okay, just a second. Now I think it's visible. Sorry for this. So I told you about, imagine you are a manager at SBI and Mr. Mehta is worried about the rate of the dollar after 3 months, and current dollar rate is 83 rupees 83 per dollar, and after 3 months this rate becomes about 83.80 paise. So if the rupee strengthen like 82 rupees, so exporter will lose 1.80 per dollar. That means 18 lakh loss. So in that case, there is a concept of forward contract. There is a concept of forward contract. Book the amount in advance. About by using the forward contract, and after 3 months, even if market rate are changes, in that case Mr. Mehta gets 83 rupees 83.80 fixed rate, profit secured, peace secured, everything is secured here. So this is the concept of forward rate. Is that clear? Right? So these are the things which are important to learn in the BFM. So today let's take a small topic, as this is the demo class. Topic is correspondent banking, accounts and other services. Third chapter in our international banking module, BFM unit, module A, international banking. So what is correspondent banking? What is correspondent banking? Let me tell you first about the correspondent banking. Suppose here you are working in SBI Mumbai. A customer walks in and wants to send US dollar to New York, but SBI does not have a branch there. Then how will we send the money? Then here our hero, correspondent banking, is here. correspondent banking is the process where is the arrangement between the two banks, usually in the different countries, where one bank provides services to another bank to enable these international transactions. Clear? Correspondent banking is that arrangement between the two banks, usually those banks are in the different currencies, and where one bank provides services to the another bank to enable international transactions. Right? So that is the concept of correspondent banking. Suppose if SBI opens an account with Citibank, right? Just a second, give me a minute. So here, if suppose this SBI bank opens an account with Citibank. Citibank is in New York. This allows SBI to make US dollar payments and receipts through the Citibank. So banks cannot open here branches in every country. That is not possible to open the branches in every country, because this is very long process as well as very expensive process, right? It facilitates, this correspondent banking facilitates trade, remittance, as well as forex settlements. It also enables medium and small banks to offer international services, right? So if I am asking you the question, which account is called our account with you, so we will learn about this. You have to give the answer of this question for just a second. I am explaining you about the first tell me about that. Are you able to understand what is correspondent banking, right? And when to book the this concept? Okay, so in the correspondent banking we can say that there are types of accounts. First account is we have nostro account, where our account is with you. That tells our account is with you, means our account is with you means when nostro accounts are generally have operated in foreign currency, it is used to make the payments abroad. Then there is next account, which is vostro account. What is vostro account? Vostro accounts basically when the foreign banks in their Indian banks, INR is the currency, means your account with us, and loro account is generally their account with you. So it is referred by third banks. We can say that no nostro, no means our account with you, wo yours account with us, loro lo their account with you, right? So lots of services are there in the correspondent banking. Funds transfer, trade finance is there, clearing services are there, foreign exchange is there, investment services are there, as well as credit facilities are also there. KYC support is there. So lots of facilities are there in the correspondent banking, right? So now are you able to give the answer of this question? Which account is called our account with you? Nostro account. Nostro account is that account in which we can say our account with you. So option A is correct. So I think now you are clear with the correspondent banking concept. We will learn all the concepts here with the help of questions, right? So now I am asking you some questions which are important for your examination. You have to give the answer of all the questions in the chat box, and if you have any issue, kindly ask me. So here, first question is there in front of you. There is an Indian bank that maintains US dollar account with JP Morgan, New York. JP Morgan maintains a rupee account with the Indian bank. If the Indian bank transfers US dollar to German exporter via JP Morgan, the account used is, in that case, the account used is so the answer is there here. The answer that Indian bank US dollar account with JP Morgan is its Nostro account. Means our account with you that is used for outward foreign currency payments. So the correct answer is option A, that is Nostro account of Indian bank. Now it is clear when to use Nostro account and when to use Vostro account. Next question, a Vostro account appears in which bank books? A Vostro account appears in which bank books? Read all the options and give the answer fast. What is the correct answer? C. Vostro account means your account with us. So when a foreign bank opens a INR account in India, it is recorded in the Indian bank books. So the correct answer is there, respondent domestic bank. The correct answer is respondent domestic bank. In which bank books? Respondent domestic bank. Next question. A bank in India uses its correspondent relationship with Citibank London to pay an exporter in the UK. Citibank London in turn uses its relationship with Deutsche Bank Frankfurt to settle in euro. In the books of the Indian bank, Deutsche Bank account will be referred to as there is bank in India that uses this correspondent relationship with Citibank to pay an exporter in the UK. Citibank London in turn uses its relationship to settle in euro. So in the books of Indian bank, that detached bank account will be referred to as Loro. Why Loro? Because Loro means their account with you. Here is the Indian bank that is referring Citibank account with the detached bank, that is Loro. India is acting as the third party account. So the answer is Loro. Loro is the correct answer here. In correspondent banking, credit risk primarily arises when? What is credit risk? When the borrower or any party is not able to pay any principal amount or any money or EMI or any interest, then the credit risk arises. So read the options and give the answer. So the correct answer is there. Credit risk is primarily arises because correspondent bank fails to pass on the funds after receiving them. So banks set exposure limits and prefer only reputed correspondent with high credit rating. So the correct answer is option B. The correspondent fails to remit proceeds after receiving the funds. Next, which of the following is an example of nostro reconciliation error? Nostro reconciliation error. Read the options. So, see, nostro reconciliation means that ensures that bank's general ledger tallies with the statement from the correspondent bank. If any unmatched entry is there, that is called reconciliation error. Means any unmatched entry means reconciliation error, and generally these reconciliation errors are considered as operational risk. So nostro statement shows debit entry not recorded in the bank's general ledger. That is, we can say, example of the nostro reconciliation. Clear? Next question. Under FATF and RBI guidelines, what due diligence must a bank perform before establishing a correspondent relationship? Under FATF and RBI guidelines, what due diligence must a bank perform before establishing a correspondent relationship? So what is FATF? Financial Action Task Force. that leads global action to tackle money laundering, terrorist, and any kind of bad financing. So in this we can say that enhanced due diligence is mandatory before starting cross border correspondent relationship to prevent money laundering and terrorist financing. That's why enhanced due diligence is mandatory. So we can say that it conduct enhanced due diligence to assess AML and CFT risk. Is that clear? Let's see one more question. Which of the following transaction is least likely to be routed through a correspondent banking relationship? Which of the following transaction is least likely to be routed through a correspondent banking relationship? We can say here the correct answer is domestic NEFT transfers, because NEFT is a domestic payment system that is completely managed by RBI. There is no need to foreign correspondent arrangement in this. So the correct answer is domestic NEFT transfers. Last question. Which statement about mirror account in correspondent banking is correct? See, mirror accounts are always the internal accounts that is managed by domestic bank. Why? To track the nostro account activity in local currency until the actual statement arrives. So mirror accounts are the shadow of nostro accounts. So we can say that the correct answer is here option A. They duplicate the nostro balance in the foreign currency. So this is the correspondent banking, and many more questions we can tackle. And you can see BFM is not tough, it is practical. So this is all about we are going to learn in our batches, in our classes. And if you like this interactive session, join my CAIIB BFM Cracker batch, where we will decode forex, risk, treasury, basal and numericals through the real examples and lots of MCQs. So thank you so much. Let's meet in our next class. Till then, take care and have a good day all. Thank you.